So my next guest says there's risk on and risk off right now in equities. I want to bring in our marketgauge managing director, Michelle Snyder. Michelle, so let's start with risk on and what you're seeing there.
Well, I guess the biggest factor of risk on would be the junk bonds, because when people are investing in high yield bonds, it means that they're not worried about a real slowdown in the economy because it's interest rate sensitive. Number two would be the semiconductors. When they did correct, they corrected right into major support and they're getting a pretty good bounce. Biotechnology, interestingly enough, is still holding pretty well, and a lot of speculative money comes in on a risk on environment in that sector. And retail, although it got hit hard, also held some major support with a lot of retail earnings and retail sales this week.
Yeah.
That's the good news.
Okay. Well, let's talk about the risk off. And I know you talked in part what you're seeing in transportation.
Well, definitely. That's been an issue all along. For months now, we have not seen that sector really participate in the rally, even when the SPY was going to new highs. Of course, CrowdStrike did not help, and some of the earnings haven't been good, but it really makes you wonder just how robust this economy is when transportation does not participate, because that's trains, planes, and automobiles, if you will.
And I'm an old schooler. You know, I don't 100% subscribe to the Dow theory, but I think it's important, and that's a critical component of the old school Dow theory. I was looking at, one thing that really just jumped right out at me is that you say you see a lot more stagflation than any other economic scenario. And I got to be honest with you, no one's talked about stagflation in a while. But if that's the case, what does it mean for markets? What does it mean for Fed policy?
Well, let's start with the Fed policy. Right now, obviously, there's a lot of anticipation they're going to cut, and obviously, many people feel it's overdue, and it probably is. I think they should have cut ages ago, but that's another story. But what we're seeing in the economy is not real great pockets of growth, especially if you're looking at some of those big tech earnings looking out. The guidance wasn't that great. The jobs market, although not at critical levels, seems to be stagnating. Consumers, they have pockets of where they're still buying, but yet also we're seeing credit card debt. That's the definition of stagnation right there. The inflation part, well, let's start with gold trading at over $2,500. Oil just snuck its way back up over $79 a barrel. Copper is holding pretty good support here. Some of the other inflationary areas that we have to look at with supply chain and geopolitical situation is certainly worthy. That's where the inflation part could come in. So until we see a real growth spurt with inflation really down, or we start to see signs of recession, which also is on the table, right now stagflation seems to be the best definition.
All right, Michelle, it's been far too long. Great talking to you. Thank you very much.
Thank you so much, Charles.
All right, folks. So